Moneywise on 938 Live.
Well, time's fly. It's already a Monday evening right here on 938 Live. And this is Moneywise. I'm Keith de Souza. What are we talking about? We brought back our guests from last week because we never went beyond what a property club is. Today we want to settle on the other parts of owning a property with little or no money down, if possible. We're talking about the international edition of property clubs, and of course joining us from Azea Property Club, she's the founder and chief executive, Tan Yang Po. Yang Po, what's looking good overseas?
Thank you, Keith, for having me back. Really appreciate that. I think, whenever people worry because there's crisis all over the world, actually for property investors like us, that is perfect opportunity. So you just need to scan around the world. Where are the places that are in crisis? Like US is a very good place. The Europe is a very good region to look at right now. And there are also hidden gem, places like India, which a lot of people do not know or do not know how to tap into that market. It's actually good property investment opportunities as well lying there, waiting for us.
Before we deal with India, let's talk about Europe and the US. Those are the Western nations. Supposedly they're, stable, not much going on except economy-wise, and of course we know that the property situation there, debt crisis and everything else put together, these things may seem to be attractive. And we've seen the ads. Again, I come down to the ads, own not one, not two, but probably $1 million for X number of dollars down. Are these realistic? Is this a realistic expectation?
It depends on what you're looking for. If you're just looking for a steal and you want to keep it for a very, very long time as part of your collector's items, I suppose, then yeah, you can keep it because it's very cheap. But I always caution people, cheap doesn't mean good property investment. Because a lot of us, when we invest in property, we want to exit in 3 years, 5 years, or even up to even maximum 10 years, but we don't want to collect it as a collector's item. If that being the case, then you still have to be careful where you're looking at. Because a lot of people out there, what they're doing is they're buying at the cheap prices, like 5,000, and they're selling you at 50,000, and yet they're guaranteeing you back returns, for like 15-20%, which is unrealistic because even though they guarantee you for like 2 to 3 years, by the end of 2 to 3 years, you can still not sell your property at 50,000.
No return on investment
Exactly.
whatsoever.
So you got to be careful with all these investment out there to make sure that it's real. Of course, when people buy it cheap and they flip over, sell to you because they've done some value add to the property, then yeah, that makes sense and that's reasonable. However, with a gap of like 5,000 to 50,000, it's not practical at all.
Staying with places like the United States and Europe, we've seen the London ads coming up, and they are popular. Where are these properties available? If I wanted to buy something, probably someone would think California, New York. One wouldn't be thinking deep south.
Yeah, well,
and a lot of these properties are deep south because they're going for fire sale prices.
The reason why it's deep south and not in California or New York, because the property prices didn't drop as badly as the deep south. So if you want to look at all these kind of southern places like Florida or Phoenix, you have to understand the market trend at that point in time and who are the investors or who are the buyers of the property investment. For example, Florida, which is quite popular here as well, that is being sold, these are actually rich people retiring around that area. So during the crisis, a lot of these rich people, kind of like become poor and they have to move out of Florida to go and find jobs where they have some form of income. That's the reason why the drop is more drastic. So you've got to be careful, In Singapore, we are so used to Singapore is just one city, but Florida is a state. There are different cities that some might do well, some might not. For example, Miami is a touristic place. So chances are when the market rebounds, it will come back. But not all Florida people will come back because the rich, by the time they make their money and come back and retire, it will take some time again. But if you want to look at Florida, look at Orlando, where there's job. So I always tell people, it's not about how much it has come down, but how soon they can create job for the people to come back and work around the area. Because when there's job, then there will be demand for property, whether it's rental or to buy. So the key is find places where there's job.
669-11938 is our number. Speaking this evening with Tan Yang Po. She is the Chief Executive and the founder of the Azea Property Club. We're going to talk about the hotspots and where you might want to consider if you are considering property overseas. Moneywise continues in just a moment.
Moneywise on 938 Live.
Our number is 669-11938. You're listening to Moneywise on 938 Live. If you have a question for Yang Po, please, now's the time to do it. Don't wait until the last moment. Yang Po, you were telling us earlier that, when property investment overseas comes to mind, it's either across the border, maybe a little bit down south, or some of the resort areas in the region. What's hot these days?
As I mentioned earlier on, besides the European country, one hidden gem right now is actually India. When China was very hot, everybody is flocking to China, but not many people know about India or how to tap into the market. And the other reason why not many people are going into India is because a lot of withholding tax and capital gain tax. So people don't know how to get around it. Even for myself, 5 years ago, I was looking at India. I always tell people it's not about putting money in, it's you must be able to take money out. So even if you invest, by the time you deduct your capital gain tax, your withholding tax, there's not much to take it out. That's why a lot of people don't look at it. But the last 2 years, India has actually started to open up because they start to realize they are not able to manage the speed of growth that they have right now. So what India is today is very much like what China is about 10 years ago, before the boom. So this is a perfect timing to get into India.
So what kinds of property should people be looking at? Should they be looking at in India? Commercial, industrial, or residential?
For foreigners, there are two types I encourage them to look at. One is in terms of commercial, because then you can create cash flow out of it. The other way is to look at developing, because as a developer, then you can get a lot of tax incentive because the government is encouraging developer to help them develop the country and the cities because they couldn't cope with it. Residential, the yield in India is not as fantastic as other countries, although an advantage people say is in India you have to pay 12 months in advance, when you do a rental. So you get cash up front, but if you calculate the yield, it may not be as exciting. So commercial and development is the way to go for India.
So if someone wanted to do something like this, how would they do it? If I were to approach you and to go into an industrial property or develop a piece of property, how much would my initial investment be and how many people would need to be in part of this?
Well, it depends on, again, how you go in. If you go in as a commercial, then you may not need a lot of people. The advantage of India as compared to many other countries is it's very cheap. In India, property is very cheap, development is very cheap. So what you invest in other countries, like even in China, for example, you probably can invest in India at half the price because everything is only starting to develop, whereas China right now is already fully developed. So if you're talking about, let's say, doing a commercial development, all you need is about like 30,000 Sing dollars. You just pull about 10 people together, you probably can invest in a commercial.
Supposing, we don't really think of India, it's not first and foremost in anybody's mind. A lot of people, in a normal property investor, normal investor's mind frame, if we were going there, where would you suggest that people go? Because people haven't done their homework. I know they should be doing their homework, but a lot of people don't.
Right.
I see a piece of land, and hey, it's wonderful, but where do we go? Near the cities, outside of the cities, main states, which states? It's a huge country as well.
Right. Very good question. That's why I tell people right now, India, the first tier, namely Delhi, Mumbai, Bangalore, these are already pretty established. So you need to start going into the outskirts of these main cities, So you go to the ring or the suburb just outside all these cities, just the outskirts of Bangalore, just the outskirts of Chennai, just the outskirts of Delhi, what we call the second tier city. Because the first tier city now is really pretty established, especially since they hosted the Commonwealth last year. The development is amazing, So that first tier, not a good place for you to to make a lot of money. So it's good time for you to look at the second tier. So you name all the major cities, look at the second tier cities just circling the main city. That will be good places to invest in. But like I also tell people, a best way to invest in countries you are not known is first talk to people who have been there or invested there before, or educate yourself in those places before you go in.
So if we were going in with you, perhaps as part of Azea's property club,
right?
And we've got our initial investment. We've worked out your special purpose vehicle and how to get your money out, etc.
Right.
Going into a country is a different ball game, is it not? And then wanting to extract value from something like that, what kind of returns? That's the first thing an investor or a person like me would ask. What kind of return can I expect on my investment?
Just to give you an idea, a property on the outskirts, I'm not talking the second tier city, with just between last year and this year, same period, same piece of land, it has doubled from last year. That means it has grown 100% in a matter of just 1 year. So likewise, if you're looking at commercial, you potentially can look at, even if it's not 100%, a good 50% return, within a period, conservatively 2 years, if not 1 year. But the yield, potentially, you can look average about 6 to 7%, in terms of the annual yield, in terms of return of cash flow. But if you're looking at developing, as we all know, everybody wants to be a developer because that's where the big money is. So you can potentially look at about 50 to 100% return in a matter of 2 to 3 years.
When we talk about developers, what does that mean? That means 5 or 6 people get together, buy a piece of land, and build on that land, and I am a developer?
Yes, that's right. So what you do is you pull the money together, find someone to do the construction, and then they do the building. You pay for the piece of land and the cost of building it. Eventually, you sell to the locals. And right now, the locals, because they are so short of property, because they are growing so fast, a lot of the rural people are now investing in property. And property investment is in the blood of the Indians. So they love to buy properties anyway. They like to collect properties because for them, that's their financial security. That's why, because the demand is so strong, people are buying a lot of property. So it's easy to sell if you find the right location.
I have to ask this question, with all kinds of laws affecting you in Singapore, property-wise, and even if you own properties overseas, would that have an adverse effect perhaps for my own residential purposes in Singapore? If I declare that I have X number of properties all over the world, would I have to sell them in order to buy something in Singapore?
Well, Singapore, if you buy a HDB, then yes, within 5 years, you're not able to buy overseas property. But once you cross that line, then you're open to buy. In fact, that's how we teach people strategy. If you own property, most Singaporeans have owned property for a number of years. And we are in the habit of paying down on property. So, and right now with the property has appreciated, what you can do actually is you can do a capital refinancing, cash out money from the current property in Singapore to go and invest in India. And that's how you build your portfolio faster without having to, stretch yourself and get worked up over getting the funds, because the money is right in your own backyard, in your own house.
669-11938 is the number. If you have a question for Tang Yang Po, you're going to have to put that question on hold for just a moment.
Moneywise on 938 Live.
This is Moneywise on a Monday evening, talking all about investing in property overseas, and in particular property in India. And I'm joined in the studio by Tang Yang Po. She's the chief executive and the founder of the Azea Property Club. Yang Po, why India, and why not somewhere around the region? Is it just because India is less known?
Actually, India is one of the choices. It's not the only choice. The reason, for example, right now another hotspot is JB, because a lot of Singaporeans are now looking for retirement home in JB, where it's less stressful. You can have your own little backyard, a cheaper landed property, and if you're by the beach, you get a bit of beachfront as well. So JB is also one hotspot, but India, why we are talking about India is because a lot of people are not familiar. And since I mentioned before, when there's opportunity and you're not familiar, you need to educate yourself, expose yourself. And that's the reason why we are talking about India, because not many people are familiar.
When we talk about investing in property, is it the safety concerns, especially monetary-wise, are very important? How do you deal with something like that?
Actually,
what would be their questions to you?
Right. Last week we actually, just to recap a little bit, last week we talked about when you go into overseas, what are the important areas to look at.
Indeed.
One is the taxation. One is the legal process of the purchase. The other one is also property management. Who is going to manage your property when you're there? Or when you buy over the property. And last but not least, I think what is most important is how do you take out the money? Because I always tell people, until you can take out the money, it's not a real investment. So India, for the longest time, a lot of people cannot invest because of the taxation that is being taken out. By the time what you take back, it's not worth the while. But now that they have liberalized, there are other channels whereby you can invest in a property as well. So security, of course, is number one concern. So invest with people that you know and you trust. That's very important, number one. Number two, in India, like in China, we say guanxi, relationship is very important. It's the same in India as well, because it's not about just building the property, but who you know that can help you expedite the approval, the permits, etc., etc. All these are just as important as well.
669-11938 is our number. Going to the phone lines right now. Good evening.
Hi,
Hi, can I have your name, please?
Joshua.
Joshua, your question for Yang Po.
Okay, quite interesting. She mentioned about JB, but that JB, when it started, there was a lot of complaints about unscrupulous developers, bad workmanship from construction company abandoning it halfway, and this is actually across our shore. Pulling a group of investors and calling them developers to go all the way to India. What sort of assurance this club can offer? And there is more problems in India, as in like the bureaucracy compared to JB. But JB itself, being close to Singapore shores, everything seems to be transparent, but government says it's at your own risk because even the license may not be valid.
Okay, let's put that to Yang Po. Across the border, we would think it's easier, it's more accessible, and yet things are going wrong. You're talking about thousands of miles away and maybe a place that you have never even been to or seen. How do you deal with that?
That's why I say when places you're not familiar, work with people who knows the places, because they are probably your best bet and that you can count on. Whenever you go into developing cities, there will definitely be problems because there will be people who are not mature, may not understand, they just want a quick buck. But having said that, that sometimes is where the opportunity lies as well, because like what China is, if today you go to China, they are so established, they are so rich right now, yet although they appear regulated on the front, but a lot of things is still who you know that is going to open up the door for you. So there's actually no difference whether it's JB, it's India, it's China, even US for that matter, It doesn't mean you go with any developer means you won't have any problem because they are mature country. At the end of the day, is you have to know the people that you can trust them as well. So to answer your question, the caller regarding security, that is always to make sure that whatever you have in terms of the legal document, have it vet through by a Singapore lawyer to make sure that it is fully valid. And also normally they would give you the first charge or ownership or title deeds of whether it's the land and or the property. If you are still not sure, get a local lawyer there to do a search for you as well. And that's probably the safest you can get.
The question must be asked, how much should you be prepared to lose going in markets such as this we have been talking about?
Very good question. In fact, I told all my investors that whatever investment today, whether it's property, it's stocks or gold or whatever investment you're going to, anything that is out of your comfort zone, just make sure it is money that you are prepared to lose it all. Because today, people always like to ask me this question, is this company reliable? I always like to say, if today Lehman Brothers can collapse, any company can collapse. So it's not about how secure they are, but if you have to lose all of it, can you afford to lose it? If you can't afford to lose it, then don't invest. If you think you can afford to lose it and you're prepared to stretch your risk appetite a little bit, this is where you can get bigger returns.
So we're talking about commercial property. What about the residential sector in India? We've seen local companies going there and building condominiums and huge things like that. Condominiums here and condominiums there may have very different connotations.
Yes, it is.
So on that score, can we own residential freehold property in a country like India?
Yeah, for India, for foreigners, if you want to own local, it's best to start from a development standpoint. The reason is because if you just go in and buy a completed property, the return won't be great because the yield there it's very low because the people who rent, they can't afford to pay that higher rental. But if you build it from scratch up, then yeah, it is better option. But if you want to build from scratch up, you might as well just sell it to the locals and you can cash out much earlier and faster as well.
669-11938 is the number. If you have more questions for Young Po, now's the time to do it. Moneywise will continue in just a moment.
Moneywise on 938 Live.
We're into the final stretch of Moneywise on 938 Live this Monday evening. We're also taking your call, 669-11938. And of course, we are joined in the studio by Tan Young Po. She's the chief executive and the founder of the Azea Property Club, and we're talking about foreign property and investing in it. Let's speak with Ben. Ben, you have a question for Young Po. Good evening, Ben. Hello.
Yeah. When you mentioned going with the developer, what do you mean? Is it investing with the developer or
yes, that's right.
Developer?
Yeah, you invest with the developer. So you put the money in, they do the building, and then at the end you all split the profit.
Does that answer your question, sir? Sorry?
We can get in touch with.
Okay, let's speak with Young Po as how you can get in on the ground floor as a developer.
Okay, firstly, you have to know the people. If you don't know the people, you can contact Asia Property Investment. Is it okay if I give my number?
We'll put it out on our Facebook page.
Okay, you can put it on the Facebook page. You can get in touch, and then we can hook you up with the right people as well.
So you are on the ground, Young Po, in these countries. Do you have to go through the Chamber of Commerce or something like that? How do you start your networking role, perhaps in a new country?
Network is always the most powerful way of getting to know people, getting to know the right people. And a lot of times people always say, but this guy doesn't look experienced or he doesn't seem to know anything about property. I always tell people, don't underestimate. This person may not know, but you never know, he may know someone who can be influential or can be very powerful. Just to give you an example, currently we are also developing a seafront development in JB. And how the whole thing started was because I happened to know a friend who is a property agent, and he's the one who knows the owner of the land in Danga, and that's how we struck a deal with him. So never underestimate who you know. You just talk to as many people as possible. You will just be surprised who you can meet up and hooked up with that link you up to somebody that's relevant to what you're looking for.
Okay, back to the India situation. How did you get involved in India?
Actually, I was in India running a business about 5 years ago, and during that time I always wanted to invest in India. But when I found out the tax situation, I realized that, hey, while the appreciation is good, but what you can take out in terms of the money is not a lot. And then I kept in touch with a few property people, and finally one guy who told me that he knows somebody who's already developing in India. And that was when I went down, get to know the people and know who is behind it and what they have done before, and more importantly, the connection that they have with the government, which is very important. That's how we hooked up and do the development there as well.
669-11938 is the number. Going to the phone lines. Good evening.
Hi, good evening.
Yes, ma'am. Can I have your name, please?
My name is Dee. I don't have a question, but I just want to put in my 2 cents worth.
Sure.
I have 2 properties overseas, which are for investments. Obviously, this lady who is part of your program is trying to promote her development. I just like, of course, I mean, which is understandably so, but I just like to say that outside of just this property, you've got to consider the government policy as well as legislation with regards to investment properties. In other words, who's going to protect the rights of the overseas investor? And for that reason, both my investment properties are in Australia, and I can vouch that, it's very stable, and they don't make overnight changes with government policies with regards to properties. So that's just my point.
Okay, thank you very much, ma'am. So, yes, I think we dealt with this earlier in the program. You don't want to get into a place where the laws and the regulations change on a dime when the government changes. So, precisely, security is paramount. And how secure are we if we're talking about second-tier cities in and around India or some place like that?
I think at the end of the day, is like I mentioned earlier on, it's about knowing the right people. And India, or like a lot of developing country, while they change, they don't also like change overnight because they are very mindful. Like recently, there are talks about foreign investment as well, and they are very mindful that with their growth, they also don't want to keep foreigners out of their doors because they know by themselves they are not able to develop as fast. That's the reason why they want to open doors and welcome foreigners as well. So knowing the country, I agree, the policy is important. But most government, even though if they change, they won't literally shut foreigners out because all government know that that is a major growth generation for the country.
In about a few minutes that we have left, how easy is it to get your money out?
In India, depends on what route you are going in. If you are going in on an individual, it will be tougher because then you have to set up companies. Then it's easier for you to take the money out through the company. But if you're going in as a developer, as a foreign direct investment, then it's a lot easier because that is what the government is encouraging. So knowing the right route to go in is important.
Dan Yang Po of Azea Property Club, thank you so much for joining us this evening on Moneywise for the second time.
Thank you so much for having me.
If you have more questions for Yang Po and I have not been able to convey them to her, why don't you drop us a line at our Facebook page, official 938 Live at facebook.com. Once again, thanks for all your calls and thanks for listening to Moneywise on 938 Live.